Hey there, iguanas. Iggy here, ready to dive into some big money moves. Ever wonder what Singapore's doing with 282 billion? Well, buckle up. In this video, I'll break down Temasek's latest gamble. We'll look at why they're pushing Singapore companies to go global and what it means for you. It's like watching a high-stakes poker game, but with billions on the table. Ready to see how Singapore's betting big on the future? Let's get started. First, let's talk about what Temasek is. Think of it like Singapore's piggy bank, a massive one worth 382 billion. That's about US 282 billion. Temasek invests this money to grow Singapore's wealth and fund government projects. It's not just any investment company, though. Temasek is a state-owned conglomerate established in 1974 that has played a crucial role in Singapore's economic development. Over the years, it has evolved from managing a portfolio of local companies to becoming a global investor with offices around the world. Temasek's investments span various sectors, including technology, financial services, telecommunications, media, and healthcare. Now, Temasek's been busy lately, pushing its Singapore companies to go global and make some big deals. Why? Well, Temasek's returns haven't been great lately. In fact, last year they lost about 5%. Ouch! That's not good when the government relies on Temasek's profits. This push for globalization and acquisitions is part of Temasek's strategy to boost returns and diversify its portfolio. For example, they've encouraged companies like Singtel to invest in data centers and Singapore Airlines to merge with an Indian airline. These moves are aimed at tapping into new markets and growth opportunities beyond Singapore's small domestic market. However, this strategy comes with risks, as international expansions and acquisitions can be complex and challenging. So what's Temasek doing about it? They're pushing their companies to think big and go global. It's like Temasek is telling its companies, hey, don't just stay in your sandbox, go out and build castles. They want their businesses to grow by buying other companies or merging with them. This strategy is part of Temasek's T2030 plan, which aims to create a strong portfolio that can handle market ups and downs. Let's look at some real-world examples of this strategy in action. First, we've got Singtel, Singapore's telecom giant. They just poured a whopping $1.75 billion into a data center business called ST Telemedia Global Data Centers. This is like buying a bunch of supercomputers to rent out to other companies. It's a smart move because data centers are becoming more important as businesses rely more on cloud computing and big data. Next up is Singapore Airlines. They're joining forces with an Indian airline called Vistara. This merger is like getting a golden ticket to India's booming travel market. India has a huge population and a growing middle class that's eager to travel. By teaming up with Vistara, Singapore Airlines can tap into this market and potentially bring more travelers through Singapore's Changi Airport. Lastly, we've got a big move in the shipping world. Two companies, Sembcorp Marine and Keppel Offshore and Marine, are coming together to create a super company for building and fixing ships. This merger is like combining two expert Lego builders to make even more impressive creations. The new company will be better equipped to handle big projects and compete globally, especially in areas like offshore renewables and cleaner energy solutions. These deals show how Temasek is trying to help its companies become stronger and more competitive on the world stage. It's a bit risky, sure, but it could lead to big rewards if these bets pay off. And remember, when these companies do well, it's not just good for Temasek. It can benefit Singapore as a whole, potentially leading to more jobs, economic growth, and funds for public services. Temasek isn't just pushing others to make deals, they're making their own too. They recently sold a company called Pavilion Energy to Shell, the big oil company. This deal is part of Temasek's strategy to reshape its portfolio and focus on areas with better growth potential. Pavilion Energy was involved in the liquefied natural gas (LNG) business, and selling it to Shell makes sense because Shell is a global leader in that industry. This move allows Temasek to free up capital for other investments while ensuring Pavilion Energy can continue to grow under Shell's ownership. Now, why is all this happening? Well, Temasek needs to make more money. Over half of its investments are in Singapore companies. But Singapore is a small country with limited growth opportunities. To grow, these companies need to look beyond our little red dot. Temasek is encouraging its portfolio companies to expand globally through mergers, acquisitions, and partnerships. This strategy helps Temasek's companies become more competitive on the world stage. It's like playing a video game. Temasek has maxed out its level in Singapore, so now it's time to explore new territories for bigger rewards. They're looking at opportunities in places like India, Southeast Asia, and other emerging markets. These regions offer faster growth rates and larger consumer bases, which could lead to better returns for Temasek in the long run. But here's the thing, making all these deals is risky. It's like trying to juggle while riding a unicycle. If it works, it looks amazing. If it doesn't, well, let's just say it could get messy. Expanding into new markets comes with challenges like different regulations, cultural differences, and economic uncertainties. Temasek needs to be careful in selecting its investments and managing risks to avoid potential losses. So what does this mean for us regular folks? Well, if Temasek does well, Singapore does well. More money for Temasek means more funds for things like healthcare, education, and keeping our MRT running smoothly. Temasek's investment returns contribute to Singapore's budget through something called the Net Investment Returns Contribution, NIRC. This allows the government to spend more on public services without raising taxes. In fact, the NIRC is one of the largest sources of revenue for Singapore's annual budget, accounting for about 20% of government spending. So Temasek's success directly impacts the quality of life for Singaporeans. And there you have it, folks. Temasek's bold moves could shape Singapore's future. It's a high-risk, high-reward game they're playing. But remember, whether you're managing billions or just starting out, smart investing is all about understanding the big picture. Did this video help you see things clearer? If so, give that like button a tap. It helps more people find our content. And hey, if you want to stay in the loop on all things finance, hit that subscribe button and join our Iguana family. Got questions? Drop them in the comments below. Until next time, this is Iggy signing off. Stay curious, stay informed, and keep growing that financial knowledge.